when you look at the stock price of Zillow since the company went public, you can see it's up solidly since its IPO price of 20 bucks. Of course, that $60 price held for all of about 1 second. But the stock, as you can see, has started to recover in the last few days. What's interesting when you look at this business, though, forget the stock charts. When you look at what's going on behind the scenes, Zillow is going through a fundamental change. It's changing the way its business works from a site that was principally reliant on advertising to actually sort of a tool site for realtors so they can understand real time what's happening with pricing in their immediate area, in an area writ large, and even an area that goes on beyond many states. So realtors have a new tool in Zillow and are paying that subscription fees like they never used to. Here's an illustration of that change. This is the percentage of their marketplace business, that's the tools they sell to realtors, as a percentage of revenue. So you can see, only 6 quarters ago, it was only about a third of their business. Now it's 61% of their business. So a real big change. The other big change, of course, is turning a profit. As Martha Stewart would say, that's a good thing. The company has just turned profitable in the last quarter, so it seems that they have a handle on their expenses. They're turning into a new business with more steady revenues and subscriptions, and that's some big change coming from Zillow. Emily?
Thanks, Cory. Now, earlier I sat down with Zillow CEO Spencer Rascoff to talk about his company's growth since going public and its latest earnings report. Take a listen.
The second quarter was outstanding for Zillow. I think most impressive was our revenue growth, up 116% year over year to record quarterly revenue of nearly $16 million.
And you also turned a profit for the first time, right?
We did. The second quarter was our first net income profitable quarter and our fourth EBITDA profitable quarter. So we're very excited to have achieved net income profitability, and it's a great way to start our life as a newly public company.
Now, part of the reason your revenue is growing so fast is because you sell sponsorships to individual real estate agents. But how many more real estate agents can you recruit? I mean, at some point, aren't all neighborhoods going to be sponsored?
We have about 13,400 subscribing Premier agents right now, but there are over 1 million real estate agents in the United States. Said another way, we have less than 1% share of all the advertising money that real estate agents spend in the United States. So although we're growing very quickly, we're still dramatically underpenetrated relative to the market opportunity.
That said, though, do you think that the opportunity for advertisers who are interested in placing ads on online real estate sites, is there a limit to that?
At this stage of our growth, we're growing so quickly that we don't actually have much head-to-head competition with other online advertising players in the real estate space. At this point, we're mostly gaining share from offline advertising, and this housing downturn has accelerated the shift from offline advertising to online advertising in the real estate industry, and Zillow has been a big beneficiary of that acceleration.
Okay, how much traffic growth, how much of Zillow's traffic growth is because of the partnership that you have with Yahoo?
Zillow reported record traffic growth in July of about 23 million unique monthly users, up over 100% year over year. None of that traffic includes the traffic on Yahoo Real Estate, which we also power. If we were to include the Yahoo Real Estate number, it would increase our traffic quite significantly. But the 23 million unique number for July does not include Yahoo at all.
Now, obviously, we've seen a couple weeks of tremendous volatility in the markets. Obviously, this is your first quarter as a public company. As a CEO, what has that experience been like for you?
Well, there's a lot more paperwork as a public company than a private company. But other than that, it's changed surprisingly little about the way we operate the business on the day-to-day basis. We are excited about the IPO, and it helps properly capitalize the company for growth. But it's really changed very little in terms of our focus on product development, our focus on delighting our tens of thousands of advertisers. The IPO provides us with the resources available to keep investing across the platform, but it really hasn't changed very much about the day-to-day operations.
About the volatility in particular, though, is that something that you have been watching as the CEO of a public company? Have you been paying attention to the markets and paying attention to your own stock?
Well, I pay quite a lot of attention to the overall volatility in the housing industry, and Zillow, as you know, is an important resource for the media and for people when tracking home values. In terms of short-term volatility in our stock price or in other company stocks, it really doesn't affect us very much. We're focused on the long term. I think over the long term, markets reward companies that delight their tens of millions of users and their tens of thousands of advertisers. If we take care of those two constituencies, over the long term, the stock price will take care of itself.
Your stock actually did go up 21% in the last week, in a particularly volatile week. So obviously that is good news. Do you think other companies that are considering to IPO have missed the window, the IPO window, if there is such a thing?
Well, my personal opinion is that the IPO window is always open for high-quality companies. I think what gets squeezed out when markets are volatile are companies that are less well-positioned for IPOs. So the market clearly is rewarding companies that are growing rapidly, that have large addressable markets, that have business models that can track to profitability. Zillow meets all those criteria. I think that's why we were well-received by the market.
Now, you've decided to let insiders sell stock in 3 months rather than the usual 6 months following the IPO. Why is that?
Well, our IPO resulted in a relatively small float because we had no selling shareholders. In fact, 2 of our venture capital firms bought more shares in the IPO. As a result, we think the prospect of bringing more shares onto the market and providing more liquidity will actually help mitigate volatility, and so it will be a benefit to shareholders. So we have what's known as a price-based lockup, which means if the stock price performs in a particular way, then a portion of the lockup comes off.
What would you say is the next big opportunity for Zillow? Is it mobile? Is it social?
Well, mobile is a huge tailwind to our business right now. Our mobile usage has already doubled just year to date in 2011. Between 20 and 30% of our total usage is mobile. There are 28 homes viewed every second on Zillow on mobile devices. We have the leading real estate apps across iPhone, iPad, Android, BlackBerry, Windows Phone 7. So we're very focused on mobile, and a lot of our growth is because of the mobile catalyst.
How about social? Trulia has certainly taken steps to make their website more social. Is that something that you're doing as well?
Well, Zillow's been a social company from the beginning. In fact, we're 5 years old now, and our database of 100 million homes has been edited and improved upon 29 million times. 29 million of our 100 million homes have user-generated content on those homes. So social is really at the core of the DNA of the company, whether it's allowing owners to contribute information about their homes. We have over 60,000 reviews of real estate agents, over 10,000 reviews of mortgage lenders. So there are a lot of social elements to Zillow, and there has been for several years now.
That was Zillow CEO Spencer Rascoff. Now,